Welcome to the Underbelly podcast, brought to you by Clarity Financial, as we peek underneath, poke around, and expose the unexposed stories of the week about finance, economics, politics, and life. I'm Brent, Clanton, executive producer of The Lance Roberts Show and The Real Investment Hour. We wanted to create a forum for exchanging stories, ideas, and anecdotes that deserve more in-depth, unfiltered conversations, plus allow you a glimpse behind the scenes. As always, we welcome your feedback. Find us on Facebook or online at realinvestmentadvice.com. Now, let's step inside the studio for the Underbelly podcast, starting now. Oh, I guess that's our cue.
Is it?
Good afternoon. I'm Brent Clanton, along with Richard Rosso, Jesse Colombo. We've got Byron Kidder. Samantha's in the background watching us. We have the whole hee-haw gang here.
I'm telling you,
afternoon.
this is good.
Good stuff. Well, hey, we've got some things to talk about. We want to share some interesting stories with you, as the guy said on the introduction. And I thought we would start off, first of all, with a little market update. If you would, please, Richard, to kind of let us know what's been going on.
Well, we were up a bit in the down today, and even though we are officially tariff official.
Officially tariff official?
Well, I mean, it's like I don't feel thinner. I don't feel different.
Yes.
But we're definitely having a good day in the market today overall. NASDAQ's up over 1%. Dow's up about 0.5%. I mean, we've got a nice rally. What's interesting, again, is we're starting to still see some real good movement in what I call the non-cyclical stocks. Uh-huh. And I think part of the reason why we see what's the market doing well is even though we had a great jobs report, we had job growth 213,000, we're not seeing the wage growth. We're going to talk about that a little bit later, which is, I mean, wage growth's picking up, but it's nowhere near where we're seeing the unemployment. And we're trying to figure out what the heck is busted here. Is it productivity? What's the deal? But I think it's the fact that, hey, the Fed might see this modest wage inflation, keeps them in check, right? No big rush from Powell, and the market takes off to session highs.
Well, there's no hard and fast rule that says that they've got to do a total of 4 rate increases this year.
Well, I think the market is concerned, and it's very much should be concerned that they're going to move too quickly. And two things, and we talked about this on the show last night. One, Powell does not believe in the inverted yield curve. I've written about it. Jesse's written a great piece about the inverted yield curve. It has been a really strong predictor of almost every recession, right, Jess?
Yes.
So, but that's been, something that Powell says it's different this time. When he uses the words normalization, we don't understand what that means. He's worried about excessive growth in the economy. Look at Atlanta Fed GDP now is at 4%. So it's definitely top of cycle type of action here. But I think people are feeling, some of the people I respect and I follow, that maybe the Fed's going to be a little bit too aggressive. If this wage inflation number would have come out less muted today, I think the market would have been totally opposite of what it is today. We would have definitely had a negative day. So overall, as long as it's always, Jesse, isn't it always about the Fed? No
Really,
matter what, it's always about the Fed and interest rates, right? I mean,
we have a centrally planned economy, so it really is all about the Fed at this point.
It's a centrally planned economy. The Fed is the underpinning behind underneath this market. I understand there's great earnings and there's the tax cuts and all this other good stuff, but let's face the fact. The Fed is very important to markets, and if the Fed's going to be tempered, the market's going to love it. You get tempered wage growth, then the market's going to love it because it's going to think that the Fed is also going to be more, maybe not as ambitious.
Let me ask you a question real quick. I've been, we used to hear about the unwinding. Yeah, I don't hear about it anymore.
Well, we're trying to unwind. I guess on the QE side, we've been
quantitative tightening.
Yeah, we're on the other side of it.
We're always worried about coming out and how we're going to unwind. I mean, is that over the next 5 years?
Well, think about it. The market is like Byron not drinking for 5 days. No liquidity whatsoever.
Yeah.
So it's
drinking fluids, not necessarily alcohol.
No.
Thank you.
Or any kind of hallucinogens. So you got to keep that in mind. That's this is a drug that the market's addicted to, and if as long as it's going to take time. Now, again, we've gone to quantitative tightening, to Jesse's point, but now the other side of it is that the Fed continues to raise rates, and there is concern about the yield curve. I think it's at the flattest level it's been in a very long time if you look between the 2s and the 10s. And inversion of a yield curve or close to inversion is going to be something that is concerning. You never discount the bond market, although many pundits say the bond market's nonsense and doesn't know what it's doing. The bond market tends to be made up of much more intellectual stature or people that know what they're doing compared to the crazy emotional stock market. So, but today's a good day. Great wage growth. It was almost as close to a Goldilocks report that I've seen across the board.
Hey, we'll take it.
We will take it. But there's some breaks and there's something wrong.
Yeah.
We're going to talk about that.
Well, Jesse, I wanted to bring Jesse in to talk a little bit about what he's been working on this week. Jesse Colombo is Clarity Financial's economic analyst. He's been working up a multi-part series to explain why and how U.S. household wealth is in the midst of a dangerous bubble, why it's heading for a powerful bust, and how to preserve and grow your wealth against that eventuality. Jesse, what in the world does that mean?
Well, what's interesting is that U.S. household wealth has surged by $46 trillion, or 83%, to $100 trillion since 2009.
Thank you, Fed.
Most people, thank you, exactly. Most people view it as a good thing. Most people view it as an organic, healthy thing. We're in a recovery. Whereas the whole crux of my argument in this article, in this series, is saying that this is unsustainable. This is driven by the Fed, and it's driven by underlying bubbles in the components of household wealth, which is housing, bonds, and stocks.
So what you're covering in these series is the fact that we're seeing what the driving force behind this has been low rates. And
correct.
And the use of credit or the misuse of credit and QE.
Absolutely.
That has driven
That's exactly
up asset
it.
prices. But not maybe the underlying economy as much for 80% of the economy, right?
Correct. It's really just driven by these soaring asset prices. So in subsequent articles, as part of this series, I'm going to be really delving into the actual components of household wealth, which is, as I said, stocks and other assets, and showing how those are really asset bubbles as well. But in this piece, I show the ratio of U.S. household wealth to GDP. And if you go to realinvestmentadvice.com, you can see this chart. These charts really.
They're amazing. Yeah.
And I show that U.S. household wealth is currently at 505% of GDP. And to put that into perspective, the average was 379% throughout the last 50 or 60 years or so.
But Jesse, so how is that spread across the economy as far as is it the top?
It's going to be the
10% of the economy,
top 10%, top 5%, top
Yep.
1%, and the top 0.1%. Usually, you're going to have the majority of that, as you know.
Yep.
So, anyway, so what's interesting is that if you look at the prior bubbles, like the U.S. housing bubble, household wealth peaked at 473%. The dot-com bubble, it peaked at 429%. So, just as a reminder, we're at 505%. So, what I was saying in this report, in this article, this first piece, was that when U.S. household wealth outpaces the growth of the economy, that's when you have to worry. That's when you worry that it's not sustainable, that it's really just, it's not organic, it's artificial. Whereas when it rises with the economy in lockstep with the GDP, that's when you know it's more likely going to be organic and sustainable.
Much more organic,
correct,
probably
exactly.
more wage growth.
Yes.
So what happens now as Byron says, quantitative tightening, Fed raises rates, borrowing costs go up, right? You start to maybe leak some of out of this bubble, right?
Well, I believe that there's going to be a breaking point as rates go up and quantitative tightening continues, where really eventually the asset bubble is going to burst, and there's going to be a reversion to the mean of U.S. household wealth as well as these other individual asset bubbles that are driving it, and that's what's going to cause this wealth bubble to burst. And as I'm going to discuss in other pieces as part of the series, I'm going to discuss how this household wealth bubble has been driving inequality. You have so many people, especially on the liberal side, are wringing their hands over soaring inequality. A lot of it's driven, this is my argument, it's a rare argument, that a lot of it's driven by the household wealth bubble. So really my belief is that we need to be worrying about this wealth bubble and asset bubbles that are going to destroy the economy rather than the inequality that I view as being a temporary phenomenon.
So part of when Powell talks about normalization, and John and I were talking about it last night with you, don't really understand post-Great Recession what normalization is compared to pre-Great Recession.
Sure.
this might be the great equalizer as rates go up, because most of the population who has not really experienced this, who's this really going to hurt? It's going to hurt. I know it's going to hurt most households who are using credit to maybe make up for their lack of wage growth. But for the most part, the people that are heavily invested in the market, the more affluent people,
exactly,
those real estate investors, the people that are going to be more exposed to a cycle that can normalize, that hasn't been normal,
absolutely,
they're going to feel the brunt of it.
That's what I believe.
Yeah.
Turn my mic on. The big question is, what's going to be the trigger that pops that bubble? You know, and that's the great
I don't know what
unknown.
that rate is, but I agree with Jesse that I think every recession is different, but I think this is a debt-laden, debt-driven situation that will normalize or unwind, and it's going to cause some pain as you level the playing field to some degree.
And is that pain going to domino? Is it going to have a domino effect?
It always does.
I believe it will.
That's the Minsky effect.
Or a snowball effect where it gets bigger and bigger and bigger as more and more people fail.
Well,
at
Probably a
like,
combination of the two.
Damo
really.
ball. Wasn't that a villain in James
Damo
Bond
ball?
movie? Damo ball. It's a domino and a
Could have
snowball,
been.
because think about what happened during the Great Recession. It didn't take much to, we take so much risk, and then you take a little to tip it over, and then all of a sudden it explodes.
Right. And then everybody says, not doing this anymore. You know, and that's where it
Didn't
went.
last. And then the Fed comes in and saves us again. But can they? I would love
where
to
are
see
we
you.
at?
I
wouldn't bet on it.
I know you're writing a series of articles like before the bubble burst.
Right.
I'd love to see how you come in maybe with a series
Post-mortem.
of articles like, after the
I
fact.
sure will be.
What that's going to look like.
It'll be a
yeah.
post-apocalyptic.
Apocalyptic.
Writing it from my bunker, maybe.
Apocalyptic. Yeah.
Yes.
Yeah, writing it from
And so if people want to follow along, how do
Yes.
they do that, Jesse?
Just head to realinvestmentadvice.com and then scroll down. You'll see the articles called Why U.S. Household Wealth is in a Bubble, and it's part 1. And I'm hoping to publish part 2 next week, which is where I'm going to be discussing the stock market bubble in greater detail.
So when people realize that when you go to Real Investment Advice, it's like a conveyor belt of articles.
Yeah.
We're all writing so much. Eventually, we'll like to pull Jesse's out. Jesse's stuff is definitely much more white paperish. It's much more in depth than the
tend to
blog
write
posts.
reports rather than
he
blog
writes
posts.
reports. It's the reporting
long
Jesse
time to
Colombo.
write.
In school, he was the guy all the kids went to write their reports.
He was complaining about the chalk bubble at the time. The
what is
chalk
this, the
against the
everything
blackboard.
bubble?
Yes, he's the
That's
bubble.
what I've been saying, actually.
Everything
I coined that in
bubble. Well,
it is.
2014.
It's the
Really.
everything bubble.
And it has to do with not just bubbles in the United
Equities.
States, but, right.
Housing,
about everything.
bonds. It is. It's
Yeah.
about all your
Canadian
bubbles.
real estate, Australian real estate. You have, all sorts of different assets across the globe. Emerging markets, China's economy. So that's
We'll
what
watch Byron when he starts buying his girlfriend lingerie from Target versus Victoria's Secret. We know we're at the top.
As opposed to Walmart?
Yeah, we don't want to get anything from Walmart.
No.
Not those granny panties.
You're
So
bad.
follow Jesse's articles, man. And again, they're not articles; they're reports. They're not blog posts. So, and again, take profits. Right? We talk about it all the time. Learn how to manage risk. That's the most important thing in this cycle, or the beginning of whatever this cycle looks
absolutely.
Yeah. Good. All right.
like. Thanks, Mr. Colombo.
Thank you for having
Jesse.
me on.
We appreciate it.
Thank you. Enjoy
Thank you,
your
Mr.
weekend.
President.
All right. And our esteemed guest in the studio this afternoon is Byron Kidder.
Yes.
It's all
That's my
about
first
everything.
time here
All
on,
about everything.
Underbelly.
Huh?
First time.
Yeah, he's
Is
the
it
first
really?
time
Yeah.
it's Underbelly. Yeah, we couldn't get him out of bed. So he's finally here. Usually up around 1 p.m. or so. Gets out of his silk jammies.
Well, I'm
gets in,
glad you were able to join us
Yeah.
this
I wouldn't
early
miss
in the
it.
day.
puts the
Wouldn't
martini.
miss it.
We're gonna set Nashville on fire, Byron and I.
2 weeks,
next,
right?
Yep, next 2 weeks.
What's up
Fun.
in
Me and my
Nashville?
bud. Me and my bud. We're just gonna go hang out and
We're going to
maybe
look
meet
at
some of the Cash
some,
family. Maybe
some
we'll do
properties, some
fun-
investments.
we'll
do a little
some
bit
investments.
of
Yeah, we're gonna do some investments.
Yeah.
At what's
Retirement,
Tootsie's?
right?
Yeah,
Retirement
we're gonna
homes.
retire there.
Yeah.
So it'll be fun.
I hear that the people up there are really friendly.
They're very nice.
Yes.
You'll have a very good time.
I've got family up there.
He does.
Yeah.
Really?
Yes. They moved
I've
there
never
not
been
too
to
long
Nashville.
ago.
That's
Memphis
right.
I've been to, not Nashville. I'm
Nash-
looking forward to this because
Nashville's
all
cool.
these connections Richard
Nashville
has.
is awesome.
You want
Yeah.
to see something really incredible in Nashville? Travel south a little bit. You'll see this giant
radio antenna?
Yes.
That's WSM.
And I told him about
6:50 a.m.
I told him about WSM when I was a kid in New York.
Yeah.
After midnight.
That's right.
I'd be good to switch between the dials.
You can
and
hear it here.
listen to it.
Yeah.
And it fascinated me as a child. Now, we're staying at the Gaylord.
Yes.
And the Gaylord has an extension of WSM. They actually broadcast their part of the day.
Right.
So it'll be cool
The
for
Grand
Byron
Ole
to see
Opry
the
broadcast.
Yep.
Still on WSM.
When we go to the Grand Ole Opry, I plan to take him. He'll see the WSM. They'll be talking as they're going through the Opry live.
It's kind of like a podcast without cameras.
Yeah. Okay.
Is that the most powerful radio signal?
No,
in the
not
country?
the most. There are several 50,000 watt clear channel stations.
But I'm
in
wondering,
the
when I
country.
was a kid in the 70s and I used to listen to it, I'm wondering if at the time it was.
Yeah. Well, what's unique about it though is the antenna that it uses. It
Because
uses
it's so you can't miss it.
one antenna
Really?
to generate 50,000 watts of power.
Don't touch it.
And it is a monster. It's humongous. Worth
It is an icon there. It is a.
Oh, yeah.
It is a. I guess it's an historical.
Well, they've got the historic plaque out.
Do they
front.
have the plaque?
Yep.
Can't remember. Yeah. Okay. I thought it was neat that they actually placed the studio inside the Gaylord as well.
Yeah.
So people, and right next to the Grand Ole Opry. Actually, you can walk to the Opry. So we'll be staying there.
That's very cool.
Yeah. It'll be fun.
That's
He's
gonna be
never
good.
been. So
Yeah,
We'll
be
expect
good.
a full report.
yes, he will. Well, the stuff we can share, we'll share. So, but it'll be fun. Yeah, it'll be fun to get away from.
What happens in Nashville winds up on the internet.
Goes to Gallatin in Hendersonville. Yeah, so while before the bubble bursts, we got to get all this
Right.
Jesse's teaching me to live for today because it's all over tomorrow. So
I'm
yeah.
researching all this old Lawrence Welk music.
Yeah, you should, because
You know.
he is the king of bubbles. I
Yeah.
started following Jesse in 2000 and I'm gonna say 2009, 10, and turned him on to Lance early on, and all of a sudden Jesse's here. It's funny how things sort of work out. So again, very important stuff. So we also was going to talk about the jobs number, which was very good. So we had 213,000 jobs in June. That was above the 200,000 forecast. So now unemployment rose to 4% from 3.8. Yeah. Well, you know.
But is that a function of
You're
more
pulling
accurately
people
counting
off
the people who aren't out there? Because it's a freaky number, right?
Well, yeah, but you're also now starting to pull some people finally off the sidelines.
Yeah.
And it's a lot. It's decent news. Actually, the report was very good across the board when you look at the jobs created. I guess I still don't understand the wage numbers that have been muted at 2.7% year over year. So we're bringing labor force participation back, but we're not increasing wages. So it tells me maybe there's still more slack in the labor force. I guess we're all trying to figure that out. Why aren't wages going up as quickly? And maybe it's just, I don't know. We're just finding more people there outside in the total labor force.
Well, and working that backwards, isn't it a bit of a function of productivity?
It is. It's I think it really does stem to productivity, and productivity numbers have definitely not been where they should. I think if productivity starts to pick up, you will see wage growth start to pick up as well. So I don't know. We'll see. We're going to talk about when John comes in, Teresa Galaducci's latest report on this. Yeah.
I hear, Trump, but a few others, GOP, talking about how the economy is just rocketing and it's just booming. Now, for me, I don't see that. What do you see that or feel that? I mean, my business outside of this, what I do, I'm not really seeing that yet with respect to pickup in business. So, I mean, are there certain indicators that we're using?
Part of it's a feel good, isn't it? I mean, it's an intangible. It's an attitude.
Last year, the beginning of when Trump got in and I was on Channel 2, I used the words animal spirits.
Yes.
I'll never forget, Channel 2 came to interview me the day Trump got elected. And I said, well, don't be surprised that you might see just this change in the spirits. Once animal spirits change, people feel better. They spend more. They just, look at consumer confidence numbers.
This is my animal spirit.
Coffee.
Yeah.
You are the coffee maven. What's the coffee you drink? What is it called? Black Hell?
Death Wish.
Death Wish. Yeah.
Death
I knew it
Wish
was
coffee.
something ominous like that.
There we go.
Like
Unpaid advertisements
Yeah.
right here.
Wow, you're serious.
Oh, this is good stuff.
Really?
This doesn't need a mug.
I'm surprised he doesn't need a diaper with that coffee. I mean, I can't drink it so high octane like that. So again, all the numbers are positive. But to Byron's point, we see, and he's going to see it in Nashville, because I talked to so many people in Nashville. Nashville is hurting for workers.
Really?
Well, it's becoming an incredible convention city.
What kind of workers?
It is one of the fastest growing cities in the country at this point, and real estate values are starting to increase. You have
You
people
sent
that
me an article on that.
Yeah, I sent the article from the Wall Street Journal that East Nashville, which is sort of like our Montrose, a little bit less expensive, but it's going through this process of changing. So it's moving out all the people that found it affordable and were able to live there, and they're moving farther out to make their rents
To
and
the
so
north,
forth.
right? Because
So-
to the south is Brentwood and the
Right,
real
no,
high dollar
yes,
stuff.
no, they're going north.
Yeah.
And one of the things is the fact that the city has just become this incredible convention city. They're building all kinds of conventions. I'll show Byron some of the newest ones. They're amazing. And it's service workers. They need service workers. And there are people that I talked to, many of them over 35 years old. That is their primary career. They work service jobs. They work multiple service jobs. And they go, listen, if we want to work 24 hours a day, we can. We can't find enough workers. And they get paid $12 to $15 an hour. But what's interesting to me, the people that I talked to, and of course this is anecdotal, but I was surprised that 35 plus, that was their career.
That is surprising.
I mean, I did talk to a few people, like, trying to make it in the music, but talked to a lot of young country artists, very talented. They all play in the bars.
Yeah.
So what's very cool is you walk in and you might be you might see the next Reba. I mean, it's still like that, right? But I talked to many that said, no, this is how we live.
But is that a default career because they haven't been the next Reba? And so they've fallen back on
Well,
this
I
service
don't know.
thing?
I mean, I think that's a good question. I think for some, it is the fact that they feel no matter what, they're going to make it. And they're going to do what they can. And they have roommates and so forth. They have a great spirit
I'm going to take that bottle away from you.
about
Yeah,
it.
I know, right?
Yeah.
I know you're going to chime in.
They have
on
a
that.
great spirit. They're really good. But I'm just amazed that, well, is there anything else you wanted to do? Like I talked to one bartender, and he goes, listen, man, I love my life. It's fun. I don't really, I sort of admired him. And he made me these Tennessee sours. I couldn't feel my face after 2 of these. I'm like, you know what? I think I've got Botox. I can't, Andy. Hey, I can't talk. I said, what the hell is in these drinks? He goes, see, I'm good at what I do. I'm like, no, you are good at what you do.
That brings up an interesting point, though.
About Tennessee sours?
No,
Oh.
about being content at what you're doing.
Well,
And because that's a completely different mindset from the way we've all been programmed.
I mean, and baby boomers, it's just stressful. Like, that would stress I had to have this career.
Yeah.
Now I think back and I admire this dude behind the bar, right? Making these drinks that I can't feel my face.
Because he's happy doing it.
He's real happy and he's got no pressure and he goes from one bar to the next bar and, he's like, my life is great. And he's got flexibility and, I mean, there's something for that.
I had an experience when I would go when I was in oil and gas down to Barbados, because they had an entity there for Shell. And so when I would go, I got to see how they lived.
Yeah.
And, they're a 9 to 3. They're on the beach every evening. I mean, they really
It's the siesta
believe
lifestyle.
in living your life,
Yeah.
rather than overworking too much. And it did change my philosophy a little bit. It helped me understand a little bit more that there's a lot
you
more
gotta live
to
for today. You can't just be
to
living
life than just working so
You
much.
think about how many people who work so hard and they build up all this money for retirement, and there are a few. Like if I come in and I do a retirement plan, and they have 100% probability of meeting their plan and leave a lot of money left, I said, like you haven't lived.
Right.
Like if you have the perfect retirement plan, you maybe have not lived for today. So
Yeah.
you're going to now retire at 65, and what if you get an illness and you can't live? Or it's funny, it's like retirement should be in reverse, right? We should all be working when we're 70 and having fun when we're in our 30s and 40s and 50s. That would be fun because that's when you're mobile to do it, right?
Makes sense.
I mean, with the kind of jobs they have today, I could sit there in a wheelchair and
I'd love to be Benjamin Button.
yeah,
You think about it.
yeah, I know it would be.
Everything's in reverse.
Yeah.
So I got a question for you. Since y'all Underbelly, I like to get a little political, right?
Here we
Well,
go.
all right.
So help me understand this. This is a question. I don't have the answer. So all these places are starting to expand. Nashville, Midwest. So
Yes.
we got all these places.
Indiana.
All these people leaving the West Coast.
Coming-
Due to all the high taxes.
Yep.
All the craziness. The East Coast. And now they're coming to the South. So are the people that are living there, are they going to move here and then begin to turn
I hope
our
not.
cities more?
I would think they're going to try. Why
But
wouldn't you?
that failed. So why would they take something that they were living and supporting that failed and then come to another city and not support what has always worked?
That's a valid question that you could also apply to the immigrants that we see coming into this country who, once they arrive and become established, promptly want to turn this country into the country that they just left. Why is that?
Right.
Can't answer it.
Doesn't make
But
sense.
absolutely true. But I agree with you.
Right?
Somewhere there's going to be a line in the sand drawn, and you're like, you're not changing this.
Yeah.
There are some things that do need to be changed, but let's put it this way: it might dilute some of their
There
impact.
will be a dilution, yes.
Right.
And part of it's going to be the demographics as their kids grow up in this new region with their parents' sets of values, but planted in Texas, for example, okay, there will be changes made as they become of voting age and begin to make those decisions. It's going to be a generational change, and it may take 2 or 3 generations, but you'll see it, I believe.
Yeah.
It'll be interesting to see that.
I know a couple of people who have sons or daughters who have graduated from college and they were more on the liberal side through college, and then they get out and land a really good job.
Isn't that an
And
eye-opener?
then they begin to...
Yeah.
And the parent was always trying to help them understand the conservative side of things with respect to paying taxes and things like that. But they didn't weren't having any of it.
Right.
But then when they got out and started making more money and giving, okay, where's all my money going now on my paycheck?
I guarantee
you start
you
to get a different philosophy.
These knuckleheads that you see in these college campuses that are doing all this protesting instead of going to class and, whining and moaning about what's going on out in the world, they don't have a clue about it until they get out in it. And I guarantee you, once they're thrust upon that stage of life and have to fend for themselves, their attitudes are going to change in a big way.
Well, that's if they choose. A lot of them, they don't want it ever to end. Look at the one who was living at the parents' home. And
that's the catalyst, though. They got to get out.
Yeah.
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 And those parents evicted that kid, didn't they?
Yeah.
They did.
Wasn't the kid? He's 30-something years old.
That was a great story.
Yeah.
That was a great story. I mean, kids had some. Listen, I'd live with my parents until I'm 80. I'd live in my room with all my little action figures. I'd be as happy as
What
hell.
about,
but why don't I?
Chewie?
Yeah, with Chewy. Why put my little puppet? But why am I going to blow it?
Yeah.
By not participating and helping out in the household, or maybe even getting a job. Go work at the whatever I'm
What
going
you're
to do.
saying is, all he had to do was just a few little things,
And he would have been able to stay.
Yeah.
Dumbass.
Dip
Mom
bomb.
and Dad, you know what? I got a job over at Target, and my son, I'm so proud with that little red shirt. And I'm gonna get you a good discount, Mom, and I'm gonna give you $100 a month.
Yeah.
And I'm gonna, I'm gonna cut the lawn and all that. I could stay in my room and hang out. Come on, what a dummy! You're a dummy, dummy. Where's he living now? Where's this dude
no
living
idea
now?
where he wound up.
I
Yeah.
bet he's got a girlfriend and married already. Women like men like
and
that.
not working.
Yeah.
He'll be a kept man.
I'll change him. I know it. Yeah, my ass. So, where's John? Where's our
He's on a call. You know what? John has been racking up the business back there. We were talking about that this morning. He's had a really good response this month.
Yeah.
For June. This month has just begun here in July. But that's good. And so he's taking care of business out there on a Friday, on a holiday shortened week.
Well, and, so when we are on the radio show, and we have to get her back on, but we have Teresa Gallarducci, who's a professor at the retirement lab at the New School in New York. And every time unemployment numbers come out, she writes a report.
Yep.
And digs, and I think she's major underbelly material. So I want to talk a little bit about what she finds in the June unemployment report and what she finds for workers over 55. It's not as terrific.
What is going on in that cohort?
You know what? There's this broader measure of unemployment called U6. Actually, Mr. Santelli on CNBC today, when they were talking about the unemployment, you know, they always have the boxes of all these pundits behind them. And
it looks like, what was it, the match game that they used to do on TV with the 9 boxes?
Yeah. I mean, how do I forget the name of that show? Come on.
Hollywood Squares.
Hollywood Squares. That's what it's like.
It looks like Hollywood Squares, only it's Wall Street Squares.
But Santelli goes, you know what? I only talk about the U6. All right. So, but you got to remember, the U6 also includes discouraged workers, but it only goes back if you've had a job in a year. It's a 1-year cutoff. So so after once that year goes, you fall into the abyss. You don't even get counted anymore. Okay, these are people, they're called discouraged workers. So you have about 1.1 million long-term discouraged workers. They're not high income. They're not waiting for some attractive opportunity to come along. These are people that are 38% of poor, and they're over 55 years old. And they're unprepared for retirement. So if you read Teresa Gellarducci's report at the Retirement Equity Lab, she's got older workers at a glance make $811 less in median real weekly earnings. They have 14% less college-educated older workers in low-paying jobs. 8.6%. This is the Relabs, or the Retirement Lab's unemployment report that they look at. They call it the U7 inclusive unemployment is 8.6%. So even though the U3 headline unemployment is going down, this older worker unemployment, the people that have fallen, or long-term discouraged workers left out of the BLS, they're the missing. They're like the nomad land people, right?
Yes.
That work these odd jobs or not work at all, and they want to work. So that's just a dilemma, and these are a lot of older workers over 55 years old.
You know, Byron, you look at things like human capital.
Right.
Yes.
In the things that you do. What does this group of people represent in terms of untapped human capital? And Richard, if we were able to tap into that reservoir of talent, what would it mean for the economy? That's a bifurcated question. I'm not going
to get to it's because it'll get political.
Yeah.
But I don't mean it in a political format. Minsky, who was one of the greatest economists, talked about having nothing called unemployment insurance. He talked about guaranteed jobs. Everybody has a job, no matter what. And
might not be a job you want to do, but it's a guaranteed gig.
It's a guaranteed gig. I mean, at least until you can get on your feet. There's some job that needs to be done, and that creates this self-worth.
Yeah,
that's part of human capital, right? Because think about these people who are discouraged. Psychologically, what are they going through? I mean, they may not be able to think outside their own head anymore to even find a job. They're so discouraged. They don't feel confident. Right? Because some human capital, yes, you want to grow human capital, but there's an emotional element, or the fact that you can do it, a confidence that goes along with building human capital. If I want to switch skills, right, I have to feel confident that I can do it. And if these people have been out of work for so long, and you read about this, there's some great books that I've read about what's gone on because of globalization, because of greedy corporations that do leveraged buyouts. One's called Glass Houses, which is an incredible book about Anchor Hocking, the incredible glassware company that they made almost every plate setting in the 50s and the 60s. The Fire King, pink glass. Have some of those. Yeah, I bet you do. But then they went into Pyrex, heavy glass, right? But the company got so battered with leveraged buyout and greed, and the town just like sort of fell apart, and the drugs came in, and nobody leaves.
Because they can't.
They feel they can't.
Yeah.
They feel they can't. You know,
So there's the lack of mobility. It's amazing when you see what happens in these rural communities. They feel younger people too. Like they can say, younger people have nothing really tying them down. Can get up and go.
Sure.
Like, why am I here?
But they won't.
But they don't.
And it's not lack of mobility as much as it is lack of motivation.
Or something that's going on.
Exactly. And you and I have been there. I don't know about you, but I've definitely been there working in the radio business for the last 45 years.
You've had to be.
And I know that you've had some low spots, too, in your career. And you have to dig down deep and find
it's
whatever
hard. As you know, it's hard.
What do we call that,
and
Richard?
get back going.
Grit.
Grit.
Find the grit. You know, I
Yeah.
say people always say they have passion to do something, but until you find your grit to actually finish.
But the grit's really ugly and scary.
Yeah.
But the grit is literally what gives you the traction to do that.
Yes.
You know, otherwise you're going to slip and slide.
Yeah. I find it, you know, I see so many people in jobs that they don't like. And for some reason or another, they're scared to make a change.
They stay, right?
And they stay. And they're miserable.
And they're unhappy.
And they're driving 2 hours, 3 hours a day through traffic just to go to a job that they probably really don't want to do.
Yeah.
And so I try to, when I can, encourage people to find what I call the passion that will drive them to be, you know, to do what they want to do and to try to be successful.
Well, listen,
because once you find your
had
passion, then it becomes a lot more enjoyable, and then things begin to fall into place, and then you start to get that motivation, Brent.
Well, I mean, Byron had a cushy gig, right?
Totally.
Working for a big company. We
Unbelievable.
talk about it all the time.
Absolutely.
Like, why did we go out and go out on our own? Because, you know, good incomes, could do what we want, never had to really worry, but not happy.
Fantastic
right?
expense account. But no, you know what? I had achieved what I believed was my success in that business. And for me, it's about accomplishing things, new challenges, and the reward of that.
Yeah.
And so, you know, as Richard well knows, I left a 18-year oil and gas career, working my way up into very senior level management positions, but it wasn't challenging for me anymore.
Well, a job like that, with all of the trappings and all of the benefits, comes with a cost. And you discovered what that cost was and decided, hey, I'm not going to pay this.
Yeah.
You know, and that's fine.
Right. Yeah.
But you also had the opportunity to do that, too.
Right. Well, you know, I worked really hard to get where I was, and those 18 years afforded me the opportunity to try and start my own business and do what I wanted to do.
And the toughest part is people don't want to leave, and especially as older workers, because the population now we're gaining more in older workers sticking around. If you really do want to get a raise today, you better up your human capital or your skill set and leave and be mobile and find another job. But what's funny, I understand somebody who's 60 not wanting to do that. I don't understand someone who's 35 not wanting to do that.
Or 20. I had a very interesting conversation with the security guard downstairs last evening who has come over here from Nigeria, a very intelligent young woman. She's going to college at night.
I've talked to her a couple of times. Very nice. Yes.
Patience, I think, is her name.
Yeah.
Nice kid.
Yes.
But she's all screwed up about how it's all unfair, that too many people are making so much money and the rest of people are hungry. And
oh, really? I never got that far with her.
Try to explain to her, well, you can do something about that. We're not going to give it to you, but you have the opportunity to work your way out of it.
Well, what I've noticed about is that when you pass by, she's always on her phone. She could have a book. She could be studying.
Well, she actually is studying.
Oh,
she's got a
phone?
She's got a laptop in front of her too. She's
sorry.
Every time I go by, she's working.
But she's working.
Yeah.
So it's okay if she's complaining. Maybe that fuels her. But she's maybe working towards something better.
There's hope for her.
Yes, there's hope
Hey,
for
look,
her.
when I was in my, I did open up a couple small businesses when I was in my late teenage years and early 20s that they were successful, but I couldn't take them to the next level because I hadn't earned that opportunity with respect to, you know, when you're that young, you want to do anything. You want to open up your own business. Yeah, I wanted to open up this. But I was able to do what I'm doing now simply because I put in the time, the effort, and saved my money to be able to take, to start my own business.
The National Bureau of Economic Research did a great report, came out a couple of days ago, that looked at entrepreneurs in the country.
Yeah.
And your average entrepreneur is older.
Really?
Yes. 40s and 50s.
That's very interesting.
Yes, for
Because
those who go out and start their own business, they have the backup. They have the charts to show that if you're going to be an entrepreneur, most likely you're going to be maybe in your 40s, late 30s or 40s that are doing it. So maybe they look, get some experience,
Right.
life experience.
there's a maturity quotient.
There's
in that.
to go through the resilience of like getting knocked down and
Yeah.
getting picked up. Like you and I were talking about, I wrote this piece for Facebook about George Washington.
Oh
right?
my goodness! If you haven't read that, find his Facebook page and go read it.
But it's just about the going through incredible trials and getting knocked down and maybe even exiting what you love, and then to regroup and come back is very challenging. But as you get older, I guess you gain all this experience. You can deal with some of those mishaps.
I
guess,
was able
or-
to set up a very unique, nice business plan strategy that has worked on first implementation of my architectural design and interiors business. And the strategy from day one has really worked for me. And that's just because of the wisdom and the experience that I was able to achieve over the years to help me put that plan together. So,
Yeah, it's again. So if you want to change, we were talking about John. Well, look who's here.
I
John.
came in late.
John Coumarianos is
Sorry
joining
about
us,
that.
ladies and gentlemen.
John, what's the deal with wage growth, man?
Wage
How come
growth.
we're not going anywhere?
I know, right? Everyone's high on the jobs report, but wages aren't moving. So
Is it productivity? What's going on? What are those? I mean,
I don't have. If I could solve that problem, I'd be. That's above my pay grade, unfortunately.
I
my
guess
wages hopefully
I was
will go
saying
up. But
during the market open, which is really your job, that I think the market really liked it because it may mean that the Fed's doesn't have to be so aggressive. That
Sure.
if it was a heated wage growth number, then it would have been a different story in the markets today.
It's an interesting point. Maybe some of the heat is off the Fed to keep being aggressive because wages are not going up. So yeah, it's a fair point.
But we talked about last night that Powell seems steadfast
yes,
on
two more
increasing
hikes.
rates. Yeah,
Two more hikes.
at least
this
two
year.
more hikes.
Yeah, it seems that way.
And what did he say? Something about he's even willing to curtail growth?
Yeah, that's right.
Something as bold
it's,
as that.
It's a change in the language, and I think nothing in this, despite the flat wage growth, I think nothing probably in this jobs report is going to discourage him.
No, I don't think so.
Yeah.
The market seems to think so.
Yeah.
But he doesn't seem to be discouraged by one.
No,
One
it's
wage
going to
growth.
take a lot more than flat wage
Well,
growth.
unless it's the fact is instead of maybe 2, maybe the market was thinking he might even look at 3. I thought maybe he would look at 3.
Yeah.
And maybe I don't know. All I know is that it was not overheated, and the numbers look good. They were pretty broad based, and it's as Goldilockish as you can be.
It is.
With wage growth where it is. I don't know when these productivity numbers actually come out or where productivity stands.
I don't know where it stands right now.
But I would think if that starts to heat up, then you would start to see
yes,
a little bit more in the form of wage growth. But again, I don't know. It's a little confusing. We were talking about Teresa Gallarducci and the fact that we have poverty rates of older workers.
Yep, and they're not. She complained. I think they're not included in the
Right, they fall off the rolls.
labor participation rate, labor force participation rate.
Right.
Easy for me to say.
Yeah.
Yep.
Is it? Hey, last thing, tariffs. Do you feel thinner? Like, does your wallet feel
Does
thinner?
your wallet feel thinner? Yeah.
I mean, I'm trying to write something about tariffs, and I have a huge stack of old magazines that talk about it through the 20s. I don't know if it's different this time, and I hate to use those words. I don't think we really know the impact here, do we?
I don't think we do. It'll be ironic if companies got a big 20% tax cut only to have their profits,
Yeah.
so they got a profit boost, and then now will they have their profits cut because of the tariffs? Who knows?
Well, Micron came out and said that due to what's going on with China, that it's only going to be like a 1% hit,
Yeah.
which was, I mean, the market took it hard earlier on thinking it was going to be much more. So we really don't know. I mean, Trump's economic policy, even though you can pull from history, is really an unknown.
It's an unknown, yeah. And you'd think the market would be responding badly to an unknown, but so far, so good, I suppose.
Well, it's not responding great, right?
Yeah.
It's been in range.
Yeah.
Who knows what keeps it in this range? I really think it's the Tax Cut and Jobs Act that's brought so much money back to these companies that has kept it above.
Right.
So we'll have to wait and see and talk about it as we go forward.
That's right. Maybe on Monday, because we're out of time for this Underbelly podcast edition. Thanks so much for watching us this afternoon. Thanks to Richard and John and Jesse and Byron and Sam. And we'll see you on the internet. Have a good afternoon.